The top 5 traders don't just pick good stocks, they master the 5 skills that most people never think about, and the real reasons why most people build wealth while others seem to always be losing money or can't figure out a strategy that works. We're going to go into it. Let's jump right in. We're going to be using the whiteboard today. So, as you can see, we got number 1 here mapped out and ready to go. And number 1 is going to be risk to reward. So risk to reward focuses on a few things. Essentially, we're talking about the risk, the amount you're risking to the profit, the reward, and it's very overlooked. It's very overly used. It's kind of like when the doctor tells you, eat your fruits and veggies and don't eat processed foods as much or something. I don't know if a doctor tells you that, but it's like it, but most people don't do it. But the people that do it are really healthy, and that's kind of the story. So, like for example, Mark, one of the people I work with, had an 85% win rate. So he was winning 85% of the trades. Okay, 85% win. But he was still losing money. So you might say, what? That doesn't make sense. It's because his losses would wipe out multiple wins. So he would, let's say, he would risk 100 to make 100. If you're risking 100 to make 100, then you're not trading. You're basically donating. You're gambling, because once he shifted to, for example, a 3-to-1 setup, which I actually normally do a 5-to-1 setup, but he shifted his risk to now going for $300 of profit and only risking $100. Then he can afford to lose like 4 out of 10 times. He could have a 40% win rate and still be profitable. So it wasn't that he was struggling with his ability to pick stocks. It was that he was struggling with his execution of shifting his setup, putting with even the same win rate now that he has. Let's say he has an 85% win rate, he's still compounding. So this is kind of how it looks in a visualized form. And I'll actually include a free calculator. If you want to grab it, it's a free calculator you can get and use in the first link in the description down below. It's software, so you can use it as much as you want, and it works really good on desktop, not so good on mobile, but give it a shot. So essentially how it looks, and we've done this in previous videos, is let's say our losses here, we could use dollar amounts, but let's just use percentage amounts. Let's say you're risking 2.5% and you're going for 10% to 20% up here. Now when you buy here, you could lose and lose and lose, but your margin for profit is so much greater than that of where you'd manage your risk. So that's why it makes sense to do it. So let's say that you risk losing $100 and you're looking for a gain of, let's say, $300. Would you risk $1 to make $3? Yeah, of course. Because if you're right, just 4 out of 10 times, you're still profitable. So that's the kind of math that the pros in investing will play with when it comes to trading and investing. So those are the keys. So on the shorter term investing, that is the key. Now, when it comes to number 2, if I could pull this up here, let's get the right, there it is. Number 2 here is emotional control and execution discipline. So you got emotional, let's kind of make this bigger here. You got emotional control and execution. There you go. Now, when it comes to this side of things, that's not a good execution. That's okay. A good trade executed emotionally becomes a bad decision a lot of times. And you have to think about this, right? The best strategy in the world, right? You can have it. You can have the best strategy in the world, but if you panic and you hesitate or you chase or you let, for example, like in Mark's case, one trade wipe out all your winnings because you didn't manage risk, it won't save you. And a lot of the best investors in the world know this. So, a good way to look at it is like if you have, let's say, an emotional trade, emotional trader is going to probably trade on a chart spike. They're probably going to also have hesitation around selling when they should. They're probably going to have late entries. They look for so much confirmation that the move has already happened. And you'll realize why it's okay to get in early as we go through this video, because you'll understand the foundations of what actually matters and how confirmation and those things are only as valuable as your ability to execute. So then late entries oftentimes are going to lead to like panic and usually lead to loss. So that's kind of like the emotional spike, right? And it's kind of this hesitation, because then you had a panic loss, and what happens? It's kind of like this flywheel, right? Where you go back around. You had an emotional loss. Now you go back to the chart, you look at another spike, you get in, you hesitate, maybe you have a late entry or whatever. It's this vicious cycle. On the other hand, this is like the emotionally controlled, disciplined trader. So the disciplined trader and investor has a plan set up. They have an alert kind of zone that they're looking for a stock to get into, or that they get really excited when they see a sell-off or something. They execute and they don't think about it. They just execute. The market doesn't really care what we think. And then they review their trade, however it went, whether it was a profit or a loss. So the discipline turns, let's say, a 50-50 setup, like this 50-50 setup that, let's say, comes up into a reliable edge versus emotions could turn it into like a 50-50 from someone that is emotional, could turn into, let's say, like more of like a regret, like an expensive regret. So it's the same thing. The stock did the same thing, but the person that was disciplined and executed ended up continuing to build on their strategy, and whether they won or they lost, they're going to be in a better spot. And I'll give you an example. There was this person I was just on the phone with the other day, one of our stock mates that I'm working with, and I remember during the earnings season, Tesla was totally ripping. This was right after kind of the elections. The whole market was on fire, and one of our stock mates, Jason, had planned this short if it spiked into this resistance zone. The move came and it was right into his zone, but instead of kind of executing the trade, he froze and he waited and then chased it on the way down. He got filled late and then he panicked and it stopped out at the worst spot. And it was because the reality is that when we were talking about it, he said, I just didn't feel like it was going to work. And that's the trap, is that high level traders, they just trade the system and they think about it. Whereas when I was talking with Jason, he was like, yeah, I didn't think it was going to work. Or like, and it's like so many times there is this reactive how you respond in life. And so many times there are moments where you have to think, just spend some extra time to think. But a lot of times in trading, and sometimes in business as well, is that just speed and execution of your plan and trusting your system is going to be better than thinking again. And so actually what you need to do is not think more about the trade that you're making or about the investment that you're making, but you need to execute the plan that you put in place when you were thinking beforehand. But once you've already thought it and you're on to the trade, now it's just time to execute that plan that you have. So that's number 2. Number 3 is going to be the skill of pattern recognition. And probability is kind of like this this thing where the pros, a lot of the investors that I know that are really, really good, and what's led to my success is that I don't predict. I mostly just position based on probability. So there is this really interesting level of conviction, but also this: I'm not going to fall in love with the stocks. I'm going to look at all of the probabilities. So we talk about it a lot, but there's all these things that contribute to probability. There is the markets, which could be broken down into like the revenues and the profits and the actual buying and selling. And then there is the part of the market that is like the usage, the real world usage. You can see it firsthand that it changes the way you chew gum, for example. And then you get into, so this is the other part of probabilities. So I can actually make this easier for us, and we'll just move this down a little bit and let's write it out. This is skill number 3, which is probabilities. Probability, and it's also kind of like recognition of patterns. And so then you got markets, you got then the analysis. So what contributes to the analysis is going to be the news, it's going to be the financials, and it's going to be the chart. And then after that, you kind of go into another step, which is not really the probability. Well, it is actually optimizing your probability with a plan for profit. So that's kind of that ratio that makes sense for you. So a really good thing, there's this guy in Stockmate I was working with named Alex, and he kept the trades that he was making on news hype, and he'd say, I think this one's going to run because of this news. But the problem was he wasn't looking at the financials. So I gave him one task. I said, go back for the last year and a half, and I know the news maybe checks out, but go check the financials and see what you can do. And so now, whenever he's looking for an investment, and this has been really a game changer for him, is he doesn't look at it like all the patterns. It's a perfect pattern. You don't need to spend hours in front of your chart. The charting should be maybe 5-10 minutes. Like when you get to a point where you can read charts, 5-10 minutes max. I don't spend all day in front of the chart. I spend most of the day letting the plan and the execution play out. Hey, Sammy. And so what we look at now, and what Alex does, is he looks at the financials, he looks at the chart, but he also looks at the market, he looks at the usage. And then when all of those things are in his favor and the chart and the news makes sense, and also, side note on the news, he goes to the source now. He doesn't go to the hype. Now he goes into his plan, and he doesn't need all these fancy things on the chart or just the financials or only the news. He just puts them all in his favor, and then he executes a plan that looks similar to this right here. So now he has everything already probability in his favor, which most likely can put him over a 50-50 chance. And then he executes with a disciplined plan. So that is the fourth one. Now, when it comes to, or the third one, when it comes to the fourth one, this is going to actually kind of scrap a large amount of people's philosophies around trading, and that all these things, they're all great, but I'll tell you that they are not going to be nearly as crucial as your plan. So planning, this is number 4. They realize the skill. The successful investors and traders know this. Planning is greater than predicting. I can go through all these things, but I can't control whether or not Larry Fink decides to sell tomorrow. I can go through all these things, but I can't predict the fact that tomorrow the president can tweet something that would skyrocket or crash the market. So the more that you trade, the more you'll realize that the success you have in investing isn't about calling the timing of the market. The timing is unpredictable. The only thing you can predict is the value. See, the value is looking at all the probabilities, building all those things, and controlling the amount of value you put in and maximizing the amount of value that you take out. So kind of like early on, when I was trying to figure out, I would always guess the market's going to go do this, the market's going to do this. And people send me this, Will, what's the market going to do on Monday? And I'd watch like 10 YouTube videos of all these people saying, this is going to happen, and this is going to happen. And it was before YouTube finance was like a thing like it is now. Now I'm grateful that I'm not in that mode, because if I was, there would be like 100 videos lined up ready to tell me exactly what's going to happen in the market tomorrow, and they would all be 50-50. So I don't predict, I plan for every scenario. And so this is kind of like the way, this was the shift that I made, that now I go into every trade with 3 plans. And essentially this plan is going to be covered by the trading plan you put in place to control your emotions. But essentially the foundation of what it is what if it goes great or my way? The next one is, what if it goes sideways? What if nothing happens? You'd be surprised how much that happens. What if it goes sideways and nothing happens? And then, what if it goes against me? What if it just like totally does exactly what I wouldn't want it to do? Kind of the answer to this is, it doesn't matter on any of these. Just need to make sure the plan is executing. And a quick thing to note is, one of the things that people also don't always put is the certainty in your response to, once you get into a trade and going through these things, it needs to replace the need for certainty in prediction. Because you can respond. For example, let's say it goes great, then we sell and we make money, right? So like, that's cool. We sell and we make money. Now, what if it goes sideways and it closes market? We add an order probably. In that moment, I'm going to create a stop loss or something that manages the risk, and it's going to be able to execute. In this world, things are moving so fast, 24-hour trading is basically here, but whole shares at a limit order price. And that will make sure that it gets executed. If you don't do whole shares, it won't execute after hours. So whole shares in a limit order price that actually gets hit. So yeah, below its current price, you want to just be good enough to look at the price, say below where it's currently at, and then whole shares. That way it will execute after hours, at least if you're using a platform like Robinhood or Webull or any of those. And then, of course, what if it goes against me? You can't predict it. This is like the only thing you can predict, basically, is you'll want to, manage your risk. Boosh. Like that. And so, basically, imagine like a triangle. Okay. And you got like predicting, planning, and maybe some preparation. In this triangle, there are only two things that you can control: the preparation and the planning. And the markets will not put any weights to the predicting. So now the stock's going to do what it does, and it's going to go any direction that it does. And all that you could do is, as it's going, you have, let's say, a stop loss set right here, and you have a take profit up here, and you're now trading it, and you can't predict it. You don't know what it's going to do. But because you have your preparation of knowing where you're going to enter, where you're going to exit, and then the planning execution, all you have to do is execute this. So let's say it hits here. Okay, so you lost your $100, or in this case, it could be a percentage of, 0.5% or 1%. Oh, but let's say it does this and it goes crazy, and then it goes to your take profit. Okay, you made your 10% or whatever, and that is how it works. So like, all you can control is like the entry and exit. Everything that happens in between, we don't really know. Can we use all the probabilities in our favor? Yes. And will they usually help? Normally, because most likely the best investors and their future decision making could be based on these things. So yes, it is way, way better to do this than to not do it. But we also don't know exactly what's going to happen. So that's why we have our preparation and planning. And you'll make more money if you do that. If you come back to me in 30 days, you say you've been doing that, I can almost guarantee that you'll have better results than what you currently are having, most likely. Unless you're already crushing it, then by all means. So the percentage is important, and that brings us to the final skill, which is percentage thinking. I had a stockmate the other day I was talking to tell me that he made like $100, but he was feeling discouraged because someone else in the group posted that they made $10,000 or something like that, which it's good that happens because it pushes him and stuff like that. But the reason that that's funny is because like he made $100, and that equaled like 10% of his account. And then the guy that made $1,000 or $10,000 actually only made like 1%. So he had over $1 million portfolio. And so the guy that made $100 like, oh, I only made 100. But what he's not getting excited about is he's putting too much weight on the dollar amount. The percent amount is what's awesome. So the percent is going to make more sense because why? If this guy that had the $1 million net worth went ahead and made 10%, then he would have made $100,000. So think about your gains as if you had more money, and most likely you won't feel that bad because, well, he might be upset because he only had $1,000 in his account, but he made 10%. The other person made 1%. It's a change in mindset. Now, every win becomes scalable when you look at it from a percentage base. Every loss contained, and you're thinking in multiples, not just the emotions of the dollar amounts. So, for example, like you might have trader A, let's say, has plus $1,000 on 100K. And then trader B might have plus $200 on 2K. Do you see? It's like, okay, you now are looking at it. The label is play the percent game. Not ego. Don't play the ego game. Play the percent, the progress game. So this is actually more impressive, trader B, than trader A. Now, of course, it does feel better to make more when you make those gains, but that's just part of what you got to think about. In the future, you could be there. So these are the 5 skills that are supposed to separate the top 5% from everyone else in their investing. They aren't super flashy, as you could tell, but they're what build real wealth and will scale your investing over time. And if you want to master these in real time, you want to join us in our daily live trading. There's StockMate. It's the second link in the description down below. Would love to have you there, as we are going live tomorrow at market open at 6:30 a.m. Pacific Standard Time. Don't forget, you can get this free calculator in the first link in the description. Should look something like this, but you can adjust it based on what you're investing in. And if you want the full breakdown of stocks and how to trade them at market open, we also have the targets for the upcoming week released on Sundays, which it is Sunday now. So again, if you want those, it's the second link below. So thank you so much for watching, guys. If I earned a thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next video. Take care.